ANZ Banking Group has signalled that a new $1.5 billion share buyback is likely to be followed up by further moves to return surplus capital to shareholders. The lender on Monday unveiled the buyback, which it expects to start in January, as it said it had completed a deal to sell 20% of Shanghai Rural Commercial Bank, a divestment it announced at the start of the year. Under Chief Executive Shane Elliott, the bank has sold a series of assets across its Asian and wealth businesses, and Finance Chief Michelle Jablko said it was now in a position to start returning capital. ANZ's strong capital position combined with the progress made in simplifying our business means we are now in a position to commence returning surplus capital to shareholders while still complying with APRA's unquestionably strong capital requirements, Ms. Jablko said. A $1.5 billion buyback is equal to less than 2% of ANZ's market capitalisation, but the bank made it clear there would be more capital returned to shareholders. The divestment of non-core businesses, including the sale of our Australian life insurance business last week, should provide ANZ with flexibility to consider further capital management initiatives in the future, the bank said in a statement. After last week's announcement that ANZ was selling its life insurance arm to Zurich for $2.85 billion, analysts have predicted the bank may spend as much as $6.5 billion on share buybacks in total. Under Mr. Elliott, ANZ has cut its exposure to institutional banking, wealth management, and Asian retail banking, instead focusing on higher returning domestic banking. Capital management could also be on the agenda at other lenders including Westpac in the future, because the regulator's rules on capital adequacy this year were less onerous than expected, and credit growth is slowing, meaning banks have less need to set aside capital against loans. ANZ said its core equity Tier 1 ratio of capital to risk-weighted assets would remain at about 10.6%, where it was at the end of September.